But we have Mayuresh Joshi of Angel Broking who's with us as well. Mayuresh, what's your sense in terms of Lupin's numbers that they've reported, and as well as the margins which have come in significantly below estimates?
So absolutely, the numbers look below estimates, at least from our perspective. So both on the top line as well as the bottom line, it's been a miss. Again, I think pricing pressures would be the culprit in my opinion, specifically with key drugs like Lameza and Fortimed. So I think that is one aspect which might have led to the top line miss. What's really happened with the margins, I think one really needs to understand, because again, if the pricing pressures have trickled down over there, along with what has happened with expectations of recovery in Gavis revenues taking a lot more time, and I think the issues thereof. So largely, I think numbers have been amidst our expectations. So I think management commentary on all these aspects will be key.
Yes, absolutely. I wanted your thoughts in terms of the recovery that we've seen in a lot of these pharma stocks. A lot of it is because of, fears that now pricing pressure or incremental moves on pricing pressure won't be as much with Trump in power. Do you think that's enough to create a bottom for a couple of these stocks, even though there's earnings disappointment?
Again, I think the moment largely, as you rightly pointed out, is because of Trump coming through. But again, I think the expectations are largely built in that at least for the better part of this fiscal, the margin profile will still look very soft and tepid, both in terms of pricing pressures that you're witnessing in the US markets, as well as delay in a few key launches, along with the remediation issues which have taken the sheen in terms of the profitability of pharma companies. So largely, I think the expectations are that Q3, Q4 are expected to be soft as well, and the elevated R&D expenditure is not going to help their bottom line as well. So largely, again, I think FY17 expected to be muted, but FY18, I think with the strong pipeline that they've got, my own sense is that the earnings recovery will be far more better than FY18 compared to 17.
Okay, well, we do have the breakup of the numbers which they've reported this time, so I just think we should start flashing it as well. The API segment for them this quarter has fallen 12.3%, so that's coming at around 292 odd crores. Plus, we have the North American business which is up around 73 odd percent year on year. That's not too bad. India has recovered. That one's up around 12 odd percent. APAC, which is the Asian region, is up around 23 odd percent, so that's okay. Latin America has declined, but it's not that much in terms of a mover. It won't move the needle too much in terms of the absolute figure, and rest of the world is down around 4.3% as well this time. So maybe North America hasn't grown as much as it was anticipated to grow, and India is up around 12 odd percent, so it's recovered to a double-digit growth as compared to 5% in the previous quarter, so that's a positive. It's just that they haven't sold as much as anticipated, or the pricing pressure in the US probably impacted their sales on the top line, and that's percolated onto the total numbers. Mayuresh, thanks very much for joining in and taking us through your analysis of Lupin. We're going to wait by to hear from the management soon enough to talk about how exactly the US markets did and any sort of commentary on that front. But thanks very much for joining in. I think we can take a break now, and we'll be back with more markets and more coverage.